Hello friends. Friends, we will continue with retirement of partner. Right? And in the last lecture, from the last two lectures in fact, we have been discussing about adjustment of capital. Right? In this, the most important thing is to calculate the total capital of new firm. Right? In this, the partners are going to adjust their capitals proportionate to their share of profit. Right? For that, we need is the total capital of the new firm. So there are three cases. Either this total capital of new firm will be given, or this total capital of new firm will not be given. The third one is the retiring partner is paid by bringing in cash by the remaining partners in such a way that the capitals of remaining partners becomes proportionate to their share of profit. So what is important is the calculation of total capital of the new firm. Right? So in this lecture, I am going to discuss a practical problem on this, a full-fledged practical problem. Right? Let's see the practical problem. If you have to go through the concepts, please go through the last two lectures. Clear? Then you will be clear about the concepts, and then this question will be very easy for you. Okay? Let's see. They say the following is the balance sheet of Aruna, Karuna and Varuna as at 31st of March 2009, who have agreed to share profits and losses in proportion of their capitals. Clear? So, what is the profit sharing ratio? 2:3:2. Because they say that the profits and losses in the proportion of their capitals. Okay. Now, this is the balance sheet given to us. Then he says on 31st of March 2009, Aruna desired to retire from the firm and the remaining partners decided to carry on the business. It was agreed to revalue the assets and reassess the liabilities on the following basis. Land and building to be appreciated by 30%. Now, as soon as you see anything related to the revaluation, you know one thing in the mind that you have to prepare revaluation account. Right? This is one adjustment. Okay. So it says land and building to be appreciated by 30%, machinery be depreciated by 20%. There were bad debts of 17,000. Okay. The claim on account of workmen compensation was estimated at 8,000. Then he says goodwill of the firm. This claim on account of workmen compensation is related to reserves and accumulated profits and losses. So you have got two adjustments. One is regarding revaluation, one regarding reserves. Okay. The third one, goodwill. This is all what we have studied in the beginning. All the adjustments, goodwill, revaluation, reserves. Okay. So he says goodwill of the firm was valued at 1,40,000 and Aruna's share of goodwill be adjusted against the capital accounts of continuing partners Karuna and Varuna, who have decided to share the future profits in the ratio of 4:3 respectively. If this line is not given, even then you are going to adjust this share of goodwill through the capital accounts of remaining partners. This is what we have studied in goodwill. Okay. So the future profits are 4:3. Clear? Then he says the capital of the new firm in total. Be careful. What we require is capital of the new firm. He's saying something about capital of the new firm. He says capital of the new firm in total will be the same as before the retirement of Aruna and will be in the new profit sharing ratio of continuing partners. Right? Just be careful with this. He's straight away giving us the capital of the new firm. He says capital of the new firm in total will be the same as before the retirement. What is the capital before retirement? 7 lakhs. He says capital in total will be the same, 7 lakh only, which will be distributed in the new profit sharing ratio of continuing partners. Clear, friends? Now, clear? The last says amount due to Aruna be settled by paying 50,000 in cash and the balance by transferring to her loan account, which will be paid later on. He says whatever is the balance that is payable to the retiring partner Aruna, out of that 50,000 will be paid in cash and the balance will be transferred to her loan account. Clear? So just go through the question once. Okay. This much question. Go through this much question first. Till revaluation. Clear, friends? Let us start. So you have to make some adjustments. So what are the adjustments? Okay. Now, first of all, we will prepare revaluation account. Clear? Because in the very first we have the revaluation information given. We will prepare revaluation account. If you are clear with the concepts, then just go by the flow of question. What is the question saying? Then that will be very easy for you. Be careful with the formats, friends. Make proper formats in the exams. Okay. Now, what is the first? He says land and building to be appreciated by 30%. How much is the land and building? 2 lakhs. To be appreciated by 30%. Right? We have to increase the value of an asset. If the value of an asset is to be increased, then we will debit the asset and credit the revaluation account by land and building by 60,000. Clear? Next, he says machinery be depreciated by 20%. 20% of this 60,000 again. He says machinery to be depreciated. That means the value of an asset is decreasing. So we can say to machinery, how much? 60,000. Okay. So there is an increase of 60,000, then a decrease of 60,000. Balance. Now, he says there are bad debts of 17,000. And if you see the balance sheet, there is a provision for doubtful debts to the extent of 10,000. We have a bad debts of 17,000. We have a provision of only 10,000. So out of this 17,000, we will use 10,000. The provision which we have created. What is the extra bad debts? 7,000. The 7,000 we will take in revaluation account. Simple. To bad debts 7,000. Okay, I'll show you the journal entry regarding this. Let's see. If we talk of bad debts, he says bad debts 17,000. Okay, provision we have for 10,000. What is going to be the journal entry? First of all, if we have the bad debts, the value of the debtors will reduce. if the value of an asset is reducing, the asset will be credited. So the journal entry will be bad debts account debit to debtors account. Clear? How much? 17,000 and 17,000. Clear? Now we have to write off these bad debts. For this we have a provision of 10,000. I'll say provision for doubtful debts 10,000 to bad debts, but bad debts we have of 17,000. Now the remaining 7,000 will be transferred to revaluation account debit, right? 7,000. Clear, friends? So that's why in the revaluation account we have taken bad debts as 7,000. Anything else relating revaluation? No, nothing. Clear? So now we can say, if you see, there is a loss by loss transferred, right? What is the total loss? Total loss of 7,000. How it is to be distributed between three partners A, K and V? What is their old profit sharing ratio? See, it is given that they have agreed to share profits and losses in the proportion of their capitals. So the old profit sharing ratio is 2:3:2. Clear? So this is to be distributed in the ratio of 2, 3 and 2. Clear? So this comes to 2,000, 3,000 and 2,000. 2,000, 3,000 and 2,000. Total comes to 67,000. Clear, friends? The bad debts point is clear. This is one important point in this. Okay. So this is our revaluation and we have got the loss on revaluation. Clear? Now the next step is preparing the capital accounts and finding out the balance that is payable to the retiring partner. So we are going to prepare partners capital accounts. Okay. You can make the formats. Okay, let's start. So we have three partners. I'm writing it in short, AKV. Okay. Particulars, Aruna, Karuna and Varuna. Right. So what is the balance? First of all, by balance brought down. What is the existing balance of capitals? 2 lakh, 3 lakh and 2 lakh. I'll write this down. I'll say 2 lakh, 3 lakh and 2 lakh. Clear? Now, we have done the revaluation. We have got loss on revaluation, we will transfer this on which side? Here to revaluation loss. This comes to 2000, 3000 and 2000. Clear, friends? Now, next, if you see, next is the workmen compensation, and we have a general reserve also. First of all, let's treat workmen compensation. He says the claim on account of workmen compensation was estimated at 8,000. How much is the compensation reserve? 15,000. Out of 15,000, there is a claim of 8,000. So, what is the balance that is distributable? 7,000. Right? This is how we treat workmen compensation. What is the total reserve minus what is the claim on account of workmen compensation? 8,000. The balance 7,000 will be distributed among the old partners in old ratio. Clear, friends? So, we will say by workmen compensation reserve. So what is the amount? 7,000. 7,000 to be distributed in the old ratio among the old partners. So this will come to 2,000, 3,000 and 2,000. Right? Because the old ratio is 2:3:2. Clear, friends? Now, any other reserve? Yes, journal reserve appearing in the balance sheet at 35,000. We have to distribute this among old partners in old ratio. So by journal reserve, okay, so this will come to 10,000, 15,000 and 10,000. Clear? Next, any other reserve? No, sir. Okay, now goodwill. He says goodwill of the firm was valued at 1,40,000 and Aruna's share of goodwill be adjusted against the capital of remaining partners. New profit sharing ratio is 4:3. Let's see the treatment of goodwill. Working note, okay? Goodwill. So you have three partners, A, K and V, right? This is the retiring partner, okay? What is the old profit sharing ratio? This is 2:3:2, isn't it? What is the new profit sharing ratio between the remaining partners K and V? This is 4:3. Now for the goodwill, what you need is, the very basic thing you need is gaining ratio. What is the gaining ratio? What is the gaining ratio? New share minus old share, isn't it? You will calculate gaining ratio, which is new share minus the old share. Now, for Karuna, if we talk of K, what is the new share? It is 4/7. What is the old share? It is 3/7. So what is the gain? 1/7. For V, what is the new share? 3/7. And what is the old share? 2/7. So his gain is also 1/7. So what is the gaining ratio? What is the gaining ratio? This comes to 1:1. That means whatever the goodwill payment is to be made to the retiring partner, that will be shared equally by the partners. Okay. Now, what is the total goodwill given to us? This is rupees 1,40,000. Clear? What is the retiring partner's share in goodwill? This will be 1,40,000 multiplied by 2/7 share of partner. Clear? So this comes to rupees 40,000. Now this 40,000 will be distributed equally between the remaining partners because their gaining ratio is 1:1. So what will be the journal entry regarding this? We'll say case capital account debit, V's capital account debit to the retiring partner A's capital account. This is the 40,000 amount of goodwill that is payable to the retiring partner. This will be shared equally between the remaining partners because their gaining ratio is 1:1. Now you can enter this in capital accounts. Clear? Now we can enter this in capital accounts. Now we will say by K's capital 20,000 and by V's capital 20,000. Clear, friends? And here we'll say to here one second. Here we'll say to A's capital this will come as 20,000 and 20,000. Clear? Now, anything else? In terms of adjustments, anything else left? We have treated revaluation, we have treated the reserves, we have treated goodwill. Anything else here? No. Regarding adjustments, we have done everything. Okay. Now he says the capital of the new firm in total will be the same as before the retirement of Aruna and will be in the new profit sharing ratio of continuing partners. Now, what is the capital before retirement? 7 lakhs. So he says this is the capital of the new firm. Total capital of new firm, he says, will be equal to the capital existing before the retirement, that is 7 lakhs, and this capital will be in the ratio of new profit sharing ratio between the continuing partners. Comes to 7 lakh, 4/7, this comes to 4 lakh, and V's share comes to 7 lakh multiplied by 3/7, this comes to rupees 3 lakh. So this is the capital in the new firm, this is the capital of the remaining partners in the new firm. What does that mean? If we see the partners' capital accounts, if we talk of to balance carried down, this is the capital in the new firm, which is given as 4 lakh and 3 lakh. Isn't it? Right? 4 lakh and 3 lakh. Now you can find out the balancing figure. You see that this debit side is more than the credit side. So what will happen? They will have to bring in some cash. The balance will be by bank. This will be the balancing figure. Why? Because they are adjusting their capitals in their profit sharing ratio, and according to that the capital should be 4 lakh and 3 lakh. So whatever the balance in the capital account of the remaining partners is, that means they will have to bring in cash, or either they will be paid cash. In this case they will be bringing cash because debit side is more than credit side. Clear? How much cash they will be bringing? 1,05,000 and 1,10,000. This means that the existing capital is less than what should be the capital of the remaining partners in the continuing firm, in the new firm. Listen to it very carefully. The existing capital after all the adjustments is less than what should be the capital of the remaining partners in the new firm. That's why they are bringing the cash, they are bringing the bank equivalent to 1,05,000 and 1,10,000. That is the balancing figure. Okay. Now we have to find out the payment that is required to be made to the retiring partner. How much payment? 2 lakh plus 10 to 10 to 50, 2 lakh 52,000. Isn't it? Yes, 2,52,000. So this total is 2,52,000. Clear? Now he says, now minus this revaluation loss, what is the amount payable then? If we talk of amount payable to A, this is 2,52,000 minus 2,000, that is the revaluation loss. So net amount payable is 2,50,000. Clear? The question says something regarding this. He says the amount due to Aruna, that is the retiring partner, be settled by paying 50,000 in cash and the balance by transferring to her loan account. Whatever the amount is due to the retiring partner, out of that 50,000 we will pay in cash. So you can pay, you will say to bank 50,000. So what is the remaining amount payable? 2 lakh. That will be transferred to A's loan account as 2 lakh. This will be paid later on. Clear? So this is how we'll prepare the capital accounts after all adjustments. 2,52,000. Clear? Sorry, this is not 2,52,000. Clear, friends? This will come to 4,23,000 and this will come to 3,22,000. 423 and 3,22,000. This is how you prepare the partners' capital accounts. Do all the adjustments as you have been doing, right? Then we find out what is the capital, what should be the capital, what has to be the capital in the new firm for remaining partners, and whatever the balancing figure is. Remember, if debit side is more than credit side, that means the existing capital after all the adjustments is less than what should be the capital in the new firm. You can write this down, make a note of it. This will help you in exams, okay? Note, if debit side is more than the credit side, it means that existing capital existing capital of remaining partners after all adjustments that means the existing capital of remaining partners after all adjustments is less than what should be the capital in new firm, right? Therefore, remaining partners will bring some cash. Clear, friends? Make a note of this. This will help you in remembering the topic. Clear? Now, one final thing, balance sheet. Let's prepare the balance sheet of the new firm. Okay, right? So we have liabilities, amount, assets, and amount. See the existing balance sheet. First of all, land and building. It has been appreciated by 30%. What is the value of land and building now? 2,60,000. So we'll say land and building at 60,000. Clear? Next, machinery 3 lakh. It has been depreciated by 20%. If you see the revaluation account, it has been depreciated by 60,000. So what is the value of machinery left with us? It is 2,40,000. Sorry, land and building, I've taken it wrong. It has been appreciated by 60,000. So the value of land and building will be 2,60,000. Right? Then next, we have closing stock. As such, 1 lakh, no treatment done. Stock 1 lakh. Next, sundry debtors 1,10,000. Out of this, 17,000 has been bad debts. So what is the balance debtors left? 93,000. Provision has been used up, right? Bad debts has been to the amount of 17,000. So debtors will reduce by 17,000. Next, cash at bank. Yes, this figure is important now. Cash at bank. What is the existing amount? 1 lakh. Right? Existing amount is 1 lakh. If you see the capital accounts, the remaining partners are bringing some cash into the bank to the extent of 2,15,000. Isn't it? And we are paying 50,000 to the retiring partner. So what will be the balance? 1 lakh plus 1,05,000 being brought in by plus 1,10,000 being brought in by the remaining partners minus the amount that is paid to the retiring partner. So this amount will come to 2,65,000. Clear? Anything on the asset side? Nothing. Now the capital accounts. Now if we talk of capital accounts for K and V, for K it is 4 lakh and for V it is 3 lakh. So this comes to 7 lakh. Clear? What else? General reserve we have distributed. Workmen compensation fund. Now this workmen compensation claim will appear in the balance sheet at 8,000 because the liability on that account has arisen. We'll say workmen compensation claim, because now it is the liability to pay 8,000. It is the liability of the business. A claim has arisen, right? Then sundry creditors, no change, 50,000. Okay, sundry creditors, 50,000. Anything else left? Yes, sir. We have the retiring partner's loan to the extent of 2 lakhs. This is a liability. Is loan to the extent of 2 lakh. Clear? Anything else? Clear, sir? So this balance sheet total comes to 9,58,000 and 9,58,000. Clear, friends? I hope this question is clear. With this, we wrap up this topic of adjustment of capital. Right? This question covers almost every aspect. We have done all the adjustments. We prepare the partner's capital accounts and how we find out the balancing figure of accounts. Please remember this note. This is very, very, very important. Clear? Now, here partner's capital accounts, note, and then the balance sheet. Clear? So for any queries, you can always email me at ksjteaching@gmail.com. Right? Please send your queries. I will answer back as soon as possible. You can send me the pics of the question. If you are not finding the solution, I'll send you the solution. Okay. Now, what we are going to do in the next lecture is, in the next lecture, we'll be starting with a new topic in retirement, that is retirement during the accounting year. So far, we have been doing the questions, we have been discussing the topics where the retirement is done either at the end of the accounting year on the last date or either in the beginning of the accounting year. Then that becomes very easy. Now, the retirement is happening during the accounting year, in between the accounting year. Right? Then how to calculate the share of profit of the retiring partner in that, we will discuss in the next lecture. Right? So that's all for this lecture, friends. Thank you so much.